Hello. Hello everyone. How you doing? How are you doing today? What an awful Friday, right? What an awful Friday. It's just amazing how boring it could be a Friday. Uh, all right, give me 1 second. I don't know why my trading view is not. It doesn't want to play nice today. All right. So, hey, HB, Rael. Hey, Robert. How are you, Luke? Mr. Ramesh, welcome to our trade review. Hi, Joseph. Hola, Carla. Hey, Sid, Salman. All right. Thank you guys for joining today. Today was a very different Friday for me. I think this was my first or second red week on the year. So following following our Friday rules, I decided not to take trades today. So today was really interesting because first I was hands off the my broker, but anyways, I mean I show up as always every day. So I refine my charts in the morning. I was looking for the pre-market action. I was trying to create my pre-market thesis and idea. So I did everything just as a regular day, but decided not to take a trade today. So uh, that was fun. It proved me that I am not a trading addict. I mean, I wasn't like this stressed, like, oh, I want to take this or something. No, no, no. I was super calm, super relaxed. So it was just a different day, but I mean, full of learning. Today, as you all noticed, it was a very difficult day to trade. Indices doing absolutely nothing. However, this was expected, right? I mean, we are about to start a long weekend, and last night we had President Trump news. So I mean, there were a lot of hints for having a very boring or ranging or just market just chilling, waiting for the weekend, waiting for more news, and I think next week we have Nvidia earnings. So I mean, there's a lot of things that can happen on the next days. So today was kind of expected to have this kind of behavior for the market. And well, let's see if we can spot some good opportunities here. Um, so let me just welcome to the rest of the people. Hey, Acid, Salman. Hey, Miguel. Welcome to our community back. Welcome back to our community. Uh, yeah, Ramesh, we moved this session so we can like be done for the day earlier. It's summer. My kids are going. Well, yesterday was their last day of school, so I want to make the most from my days. So we just decided to move it 1 hour earlier. That's very nice for our European friends. And I just found out that some of our Asian friends are also more comfortable with this new schedule. I know it's midnight for them, but I mean it's not 4 in the morning, right? It's just late. Um, hey Sabrina, hello Jose Luis, hola Jose Luis. Andrew, can you talk about the weekly gap fill? Yes, we will talk about this. All right, so I want you to show you this. So uh, this is SPY and QQQ. Yeah, this is a SPY and QQQ on the 1 minute chart. So we have this 5 minute opening range. We tried and break it, but not all the names were following. This yellow box here, it's a gap on the daily chart, and I think it's a gap on the weekly chart. We will take a look to this. And here on QQQ, this was also a gap on the daily chart. As you can see, we spent like almost 1 hour trying to break this five minute opening range. And when we finally did it, not all the names were following. You're gonna see Tesla. You're gonna see Tesla. You will say like, "Oh my gosh, what is this boring thing?" So after, well, it's gonna be easier to spot here. After pre-market news, look at this. We came all the way from 583 and we opened at 576. So this was a huge drop again with news, long weekend, very important earnings next week. So again, it was kind of expected to have like this boring day. So let's see if we can spot some good opportunities here. All right. So here we are gonna start with Apple. Well, as you know, don't trust Apple. So we try to start to the upside here. We failed to stay above the 5 minute opening range, but then we drop a little bit, and then we kind of reclaim this 1 minute opening range. I don't like too much to take trades from here, but I want you to I want you to take a look on the indices, right? So the indices were breaking out on the 5 minute opening range here, and also something that I like, it's exactly this, the famous weekly gap or gap on the daily chart here. So SPY was kind of reacting around this area here. So what we were doing here, it's just looking for this bounce here. As well as you can see, I mean, I was trying to make something here out of this, like this recovery, but actually it's an even better spot like here, like in this 1007 candle. I mean, you never know when it's gonna be like more aggressive, right? But here, if you can take a look here, it actually had this break, some displacement here, and retest here. So assuming that you open a position here, you actually have two green candles here confirming the move to the upside. And as we were saying, well, this is where right in the middle of the range, right in the middle of the 5 minute opening range. So they were doing nothing, but if you were trying to spot an opportunity here out of the intraday price action, let's assume that you take a position here and you have your risk at the bottom of the candle that broke your level here. So let's say here, and you were aiming to 197.50. So if you had this, I mean, at the very beginning it struggled a bit, but then we had this push higher on both indices, and it went for the 5 minute opening range. It was around this area here. Then it broke aggressively here, hit this 197.28. That's a key level on the daily chart. That's external liquidity. And then finally made this push higher here, and it hit 197.50. So if you took something like this was a 1 to 2.2 risk reward ratio trade. And that's the only thing available for Apple. As you can see later in the day, it came back inside of this 5 minute opening range, and that was it for the day for Apple. So anyone took Apple today? Hey, Alex. Yeah, 300 subscribers. Yay. All right. Hello, Kainif. Singapore. Yeah, that's far away from here. What time is there? Like 1 in the morning? I think, yeah, I think you are like 12 hours ahead, right? It's Saturday already. Probably, yeah, 1 a.m. Yeah, so you are watching this from a bar or a party or something. Yeah. All right. Yeah. So I guess no one took Apple. Also on the live trading, we were like waiting for some sort of a break on the 5 minute opening range, and we didn't have that break until this time here. It was 10:04. Well, that's pretty much the time of our trading party. I, I can believe. I can believe. All right. All right, so guys, let's go to the next one. AMD. I like AMD, but it was doing weird things here. So we had this break of the high of the day. So we broke this high of the day. What was happening on the indices? They were failing to create a new high right here. However, they were at the top of the range, right? They were at the top of the range, retesting this high of the day. So I like this. It had this good push here. And I watched two different opportunities here. And let me talk about this. So the first one is this break and retest of this 109. This 109, it's a key level on the daily chart, and also it's a round number, psych number, strike number. So that's why this is kind of important, right? So we had this retest here, and then we had this like impulsive moves right at the same time than the indices. So just assuming that you took this retest of this key level. This is not a difficult key level. Why? Because it's a previous high or low on the daily chart. So this is not out of understanding of the price action. This is not out of, okay, well, this is a visual key level. No, no, no. This is the previous high or previous low on the daily chart. So all of you should have this key level drawn in your charts. So if you were able to spot this, you will see how many touches later in the day we had here. But anyways, I mean, we had this break and retest of this 109 key level. And if by any chance you take something like this, well, that was super nice. That was super nice, but two different problems, right? You should be able to pull the trigger like on the second candle, trim majority of your position. Remember, it's Friday, so everything happens really fast. Your contracts are moving really fast. Time decay is against you. So you should be able to take something here, because if you didn't, I mean, you 4 candles later we hit this stop. And uh, let's talk about stop losses here. All right. So remember, when we are trying to spot our stop loss here, we have two different criteria, right? So we can set our stop loss right at the bottom of the retesting candle, or like the previous local low, or we can have our stop loss at the bottom of the candle that actually broke our level. All right. So this is a little bit wider, but I mean, this is safer, right? I mean, well, safer in the sense that you are giving room to your trade to breathe. So this is the two ways to have your stop loss level here. Well, second chance here. So we drop here. We had this drop on the indices. As you can see, AMD was able to hold kind of the same structure than the indices here. So it dropped, but not to the low of the day. It was kind of at the middle of the 1 minute, 5 minute opening range. just like SPY, just like QQQ. So, okay, so let's try a second chance here. So the indices were trying to push higher here, and we had this break and retest on the 5 minute opening range. All right. So this is the 5 minute opening range here. This is the 5 minute opening range here. And what do you see on the indices? What was happening on SPY? Well, it was happening exactly the same thing here. As you can see, they are actually twins, right? Like it's a very small candle with the body respecting the 5 minute opening range, a small wick to the downside, and then the next candle it's actually moving to the upside. So let's assume that you enter on this second candle here and you were looking or you were aiming to high of the day here. All right, that's nice. And the stop loss, it's we have two different things. Just as we said, we can set it here at the very bottom of the retesting candle, or we can set it here at the bottom of the actual candle that broke our key level. So these are the two different ways to do it. And just because we have room to high of the day, well, this doesn't matter too much, right? Can you see here? I mean, still, if you made it this trade, if you did it this trade, this was a 1 to 3.5 risk reward ratio trade. So this was a nice trade. And if you miss this opportunity here, we have a third opportunity. We had a third opportunity here for AMD. Can you spot here the relative strength of AMD staying above the 5 minute opening range, staying above of this 109 key level, while indices went again inside of the 5 minute opening range? So that's what we call relative strength, right? Because even when the indices drop a little bit, yes, AMD dropped a little bit, but stayed stronger and above this key level. So we have this third chance here on the first key level or the first entry of this 109 key level on the daily chart. So if you had this chance to enter this trade, maybe you entered to this trade on this candle confirming the move above the body of the previous candle, above the candle that actually retested our key level. So stop loss could be at the bottom of this candle that retested, or at the bottom of this candle that broke the level, right? At the bottom of this candle that broke the level. So if you had this first stop loss and you were aiming to, let's say this one is high of the day, this was a 1 to 3.3 risk reward ratio trade. If you had your stop loss right here at the bottom of the candle that broke your level, this was a 1 to 2 risk reward ratio trade at high of the day. But this actually went all the way to this 109.75 key level. So this, even when with a wider stop loss here, it was a 1 to 2.5 risk reward ratio trade. Let me go to the comments on the chat. You have questions. All right, Sabrina, for AMD, the second trade on your screen, why wait till 10:30 and not take it at 10:29? There seems to be some good reaction of the 5 minute high, and QQQ was having, okay, 10:29. Well, this is just an opinion, right? If you can see here, I mean, I'm not taking a trade right at the retest. I like to do it right at the retest. I like to be aggressive on my entries when I'm taking short positions, when I'm taking puts. But when I'm taking calls, I'm trying to be like a little bit more, less aggressive and more patient. So once we see this second candle here reacting to the same direction that we want, because it had it, as you can see, I mean, now we can see that it had the same reaction on both indices. But I mean, when we are watching this live, I mean, you don't know what's going on, right? I mean, you just saw a green candle, but it was a green candle at the end of the candle, right? So that's why I will wait for the next candle, right? I mean, it's holding here this 5 minute opening range. It retested with this 1028 candle. Then this second candle here retesting, holding the body of this candle above the 5 minute opening range. So now we have two confirmations that this key level is strong. And with this second candle, we are confirming that we are going to the upside. So it's just, I mean, if I enter here or if I enter on the 1030 candle, it's kind of the same thing here. It's just I waited just for more confirmation here. Not sure if I. Which level is your blue line? I don't have that mark on my chart. Okay, that's that's a good question. Let's go here, here, here. AMD. Which level? 109. Okay, 109. Yeah, it's this one. So this is today's candle. So what I did, it's this was yesterday candle. So what I did, it's the next low is this 109, and the next high is this 116. So I have these two different blue lines here, and the next low to the downside here. I mean, I don't have a blue line, but it's because we still have this gap on the daily chart. This is from Friday 9 till Monday the 12th of May. So that's why I don't have like a blue line here. But as you can see, I mean, the next lows, I have these blue lines. The next highs, I have blue lines. So so this was the low of this candle here. So this was the next low from our previous day candle. Not sure if that's clear, Sabrina. Where is this 109 key level coming from? Um, Alex, it's better to wait for extra confirmation. Exactly. Yeah, especially here that we had room to high of the day, right? I mean, it didn't do too much of the difference here. So I mean that was my reasoning. Some extra confirmation here. Mr. Hans, I took AMD 1044. Opening range, 84% rule. Okay. 109.50, 1044. Let's look for 1044 here. AMD 1044. Is it 944? Okay, this one. All right. So what was happening? Well, the thing about this is the indices were still inside of this range. So I understand why you took this one here. I mean, I understand the reasoning behind this trade, but it will be great if indices were above the 5 minute opening range, or even look, or even above this 1 minute opening range. So I think today was a day for being patient, Mr. Hans. Just because of the pre-market news, Everyone was thinking that the market will drop more than that. So I don't know. Like I mean, this 944. I understand what you tried to do. It's just like the indices were not showing a strength here. So or maybe I will wait for the next candle. So all right. Well, I like it here. So if this next candle it's actually doing something to the upside, you will still have something like this. Your risk will be at the bottom of here, and you needed. Well, that's the thing with this much of a risk, you will need it this 109.30. Well, that's actually not too bad, right? That's actually not too bad because if we move this like here, like yes, I mean something like this, assuming like an 84% rule, and you had this as your target, I mean this high of the day, it was almost a 1 to 2 risk reward ratio trade. And here you were watching that this thing made a higher low. It was respecting this opening price. The same thing with the indices. They were holding this opening price, holding this opening price. So this was a higher low. So maybe this second chance, I will buy it, right? I will buy it, kind of an 84% rule. But I don't know, like, because it was on the middle of the range. It was on the middle of the range, and actually not sure if you were on the live trading. If you were on the live trading today, Tony was like, okay, well, let's wait for any of the indices or any of the names to actually break the 5 minute opening range. And that's exactly what I do. I mean, not sure if you have ever watched the previous trade reviews, but I always tell you, like, wait 10 or 15 minutes until you have a clear trend or direction on the indices. So they can actually just, like, if they show a clear direction, or even if they are trending, that's even better. They can push your trades, right? So that's the reason of why I wouldn't take this 944. All right, this was very aggressive, but I understand what you tried to do there. Randall, Wolves at 20% gain with a 10% stop on the underlying be the same? Yes, it's the same. That's the same thing. I mean, you are risking. Let's say that you took a $100 trade, you are risking $10, and you are looking for a reward of $20. So that's the 1 to 2 risk reward ratio trade. All right. Okay. So that was all for AMD. I mean, later on the day, it was, respecting this market structure, higher. Can you see here? This comes here, higher lows, higher highs. This is a higher low, higher highs, higher low. So this is textbook market structure, right? This is textbook market structure here. So AMD was very nice to trade today, but it's this slow grind. I mean that's not for everyone. That's not for everyone. All right. So let's go to the next one. Amazon. I want to tell you something about Amazon. I'm going to the 15-minute chart. I'm sorry if this looks too crowded of lines. It's just because it has been moving too much. I'm just setting. Remember, the blue lines are external liquidity. They are previous highs and lows on the daily chart. So I mean, they are okay. But my white lines are the key levels on the 15-minute chart. And something very clear here is this white box area are a little bit above the 200 key level. And why the 200 key level has been really important? Because the on the previous months, not sure if you remember, guys, but on the previous months or maybe the end of last year, when we were trying to cross this 200 brick wall, we spent weeks trying to do that because happened that Jeff Bezos was selling like billions of dollars of position, and right now, that's what it's actually happening. This is why we have been having like this selling pressure on the underlying, because there's a lot of selling, internal selling from on Amazon, and it was supposed that Jeff Bezos was selling some billion of dollars worth of equity. So that's what I was very nervous about, this 200 key level. And we had this drop on the pre-market, so I was really expecting Amazon just to drop aggressively, maybe to the 190s. But this recovery is looking very good. This recovery is actually looking very good. So if they can defend this 200, I'm very positive that this thing is gonna, at least this is going to go back to this 214, this 215, right, on the next days or weeks. But so that's why it was this super important, this white box here. The yellow box, it's a gap on the daily chart. This yellow box, it's a gap on the daily chart, probably from the same days, yeah, May 9th to May the 12th. If you remember, that's the weekend where we had some good news, but probably they are fake news about the USA having good deals with the different countries. So, anyways, so we had this huge recovery at the start of the morning. So, this is the opening price for Amazon, 198.92, almost 199. So it had this little drop here. It was bought nicely, and it was struggling around this 5 minute opening range high. And when it finally broke this high of the day, and this white box is kind of a, to identify high of the day, and this order block here. I mean, the order block could be the complete candle, right? But I was kind of thinking that once we reclaim this 200, this will be kind of bullish here. So I was just setting this order block to the wick of this candle. So once we had this break of the high of the day order block here, and 201. So I was kind of bullish here. So when we held this order block here, I like it here. And why here? Look the reaction on the indices. I actually had these small circles here on the for the indices. So this is the very same time it was actually reaching high of the day, respecting this 5 minute opening range, both indices. So I like this here. So assuming that you open your position above the previous candle here, you have your stop loss level where right here at the bottom of this candle, or at the bottom of this candle that actually broke the high of the day. So those are the two different ways to have your stop loss. So you can have a tighter stop loss here right at the bottom of the retesting candles, or right here at the bottom of the candle that actually broke your level. All right. So just because we had very nice reaction here on the indices, both reacting nicely to the 5 minute opening range high, I will say, okay, well, let's take a position here. Next candle going to our way above the previous candle here. And if you were looking for a one, let's assume you were looking for this top of the area here. Just here, it was a 1 to 2 risk reward ratio trade. That was nice for a Friday, right? But if you were looking for the 201.50, it was a 1 to 2.5 risk reward ratio trade. And the good news about this thing is that it actually gave you a lot of opportunities to take your contracts out on this 101.37 to 201.40. So the very first candle went all the way up. Hey, Neto, I couldn't take some of my position here. Well, it came back 10 minutes later. It stayed above this level, went down again, and tried to reclaim the same 201.50. So it stayed around there for some time. So you had a lot of opportunity here. You had a lot of opportunities here to trim your position. And then, well, here probably you already had like only runners here. And with these two candles, probably you took your last contracts break even or something like that, right? Uh, if you couldn't enter here, well, here later in the day, 10:30, you had another opportunity. What was happening on the indices? Well, they were reacting kind of the same levels, right? They were reacting kind of the same levels. This order block from the first high of the day, 5 minute opening range on SPY, 5 minute above 5 minute opening range on QQQ. So also this, I mean, if you miss this opportunity here, you have this opportunity here, and this was with a little bit less risk because you could have your risk, let's say something like this here, and your risk was now maybe like here, and you were aiming, well, 201.50. Well, let's say high of the day, or 201.50, something like this, and your risk was at the bottom of these candles. So this was another nice opportunity to enter here. So if you have been following me, you know Amazon moves nice on Fridays. So that's something that you need. That's something that you need to understand of the tickers you want to trade. So you need to get to know them, how they move, how they react to news, how they react to key levels, how they react, uh, visually comparing to the indices. So this is the kind of knowledge you need to have about your tickers. And in my experience, because I like to trade a lot Amazon usually moves nice on Fridays. Like they are preparing for, like weekend shopping spree or something like that. I don't know. Okay, let me go to the chat. Scouting, Corner Pro, scouting and player videos. You say you want to wait a little longer for confirmation. Is that why you will not enter 10:08? Kevin, 10:08, 10:08. Yeah, I mean, yes, you can enter here. You can enter here, but because look at this, Kevin. This is the retest of this order block here. Okay, I understand. But if you are waiting for confirmation here, you should be buying at the top of this candle. And what is happening at the top of this candle? You are buying at high of the day. You are buying at high of the day. So that's why we like to have more displacement on the move. So now we have displacement on the move. Now we are moving far away from this key level. We are visually separating from our key level. And now here, even if I buy at the top of this candle, I have some room to high of the day. Not sure if I'm explaining myself, but if you buy here with this confirmation of the move, you are buying almost high of the day. But if you are waiting for this displacement and then this pullback, and you buy at the top of this candle, as you can see, you are actually buying kind of at the same place. But now you have this high as a reference to go higher, right? So here you buy at the high of the day, and here you buy with potential to actually reach high of the day and to make it worthy on your risk and reward. Okay. Rael, you took a small loss today on Amazon, had a higher time frame thesis for a pop and fade. Yeah, exactly. That's exactly what I was telling you, right? So if we break to the downside, the 200, it's gonna go to 190 easily. But today they reclaimed the 200, and now it's. I don't know where they are right now. 201.84. Yeah, like right here. 201.84. Yeah, so they defended 200. They defended 200. But I understand your thesis. Yeah, so if they look weakness below 200, yeah, that will be an absolute disaster for Amazon. They will go at least to 190. I was looking at the same thing than you. Size down today. No, nice, nice. Congratulations about your green week. And what you did today about sizing down, that's progress, my friend. I mean, that discipline. You are not. Um, how do you say? You are not following emotions or trying to show something. I mean, you are just being very disciplined. Congratulations about that. That's good performance. All right, guys. Let's go to the next one, NVIDIA. So give it a second for some confirmation here. All right. So now the levels are shown here. So what we have, it's, I want you to show this. Hey, Neto, where is this blue line coming from? Where is this yellow line coming from? Let me show you. Let me show you guys. All right. So I want to show you where these yellow lines are coming from. All right. So this is my daily chart. This is my daily chart. Can you see how many touches we have on these two different yellow lines? It's a 130. Yeah, this is 130 and this is 131.23. So basically they are the previous local pivots. Can you see local pivot here, high, multiple touches, both of them have multiple touches. Can you see that's why I was very hesitant to choose between one or the other, so I decided to leave both of them here. So multiple touches, both of them, multiple touches, both of them, multiple touches, both of them. And this blue line was the Wednesday low. So that's why is this here in the middle of this candle. So that's the reasoning behind these two lines here and this blue line here. And can you see reaction around this? 130, that was opening price. I mean, opening price today, 130.02. Something like that. Yeah, 130.02 or 130. So that's a strong key level on the daily chart. All right. So we had this push to the upside, then it came back, then we tried to break this 5-minute opening range. And I want you to notice this. So this is a break around high of the day and a retest with displacement of this 130.59. We said that this 130.59, it's external liquidity. That's the low of this Wednesday candle. So that was a very important key level here, especially if we were pushing higher, right? if we were pushing higher. And here, right here, look at the circles on both indices. What was happening here? It was they were holding the 5 minute opening range high. They were holding the 5 minute opening range high and different things, right? So here on QQQ, it was this gap on the daily chart. Here on SPY, 5 minute opening range high and above this previous week low. So a lot of context about this specific point here. So I like this. I like this. So I say, well, what if these guys open a position here? Hey Neto, I don't want this candle. I want the next one. All right. Next candle right above the body of the retesting candle here. So your risk, let's talk about this. Your risk could be two different things. The bottom of this retesting candle right here, or something like here, because these are the candles that are actually breaking this key level here. So if you had something like this, maybe this was a 1 to 2 risk reward ratio trade. If you had something like this was a 1 to 2.5 right here. Yeah, well, right here at the very top, right here at the very top, it was a 1 to 2.2 something. That was nice. But again, if you were not ready to trim your position here, you maybe stop out here. But what happened later in the day? What happened later in the day? Reclaim of this level, reclaim of this level. Now, because we spent 2 or 3 attempts here for this reclaim. Okay, well, let's wait for some push to the higher, to the upside. So here we have this break, displacement, and retest of the first high of the day, 5 minute opening range, and here we have a good reaction. And what was happening on the indices? Well, I think on the order block created on the first high of the day. So if you wanted to do something like this and you waited for the next candle above the body of the retesting one, next candle above the body of this one, and you were aiming to high of the day here. Can you see high of the day here? It was a 1 to 2.4 risk reward ratio trade, something like this. And you can have your risk here at the bottom of this or here at the bottom of this candle here. So both of them gave you more than 1 to 2 risk reward ratio trade. So now we have information about this new high. So now this is worth the risk, okay? I want to read your comments about NVIDIA. Anyone took NVIDIA today? Anyone took NVIDIA today? No one? Do you see any other entry here with the indices pushing or not pushing at all? No. All right. Let's go to Tesla. Look at this. Okay, I'm going to give a minute so we can laugh about this ugly price action on Tesla. So this, look at this. So we spent, okay, here. We spent almost 3 hours inside of the 1 minute opening range. Not the 5 minute, not the 15 minute, inside of the 1 minute opening range. Almost 3 hours. So if you were watching Tesla today, maybe you need someone to wake you up later in the day. This was ugly, awful, disaster price action here, right? It tried here, rejected. It tried here, rejected. To the downside, this 336 key level on the 15-minute chart I want to show you this. This is the 15-minute chart. So this 336 was Wednesday consolidation area here. So yeah, ugly price action for Tesla. I'm not even spending a second trying to identify a good trade here. But anyone took a Tesla trade today? Sabrina, Sabrina have a question for Nvidia. 1128. That will not be an 84% rule because look at this. This is a change of character, lower high, lower low, lower low. And this is another change of character. So this is a different play, but this is not an 84% rule, right? And Tesla untradeable this week. I completely agree. Tesla was awful today. All right. So let's go to Microsoft. Let's go to Microsoft today. We are on the middle of a lot of blue lines. Why? Let me show you. So this is yesterday. This is yesterday price action. So the next candle, the next high on a candle on the daily chart was this one from July last year. And the next one to the downside was this 451 something, and the next one was this 450, and the next one was this 448, and I have several key levels for both sides, right? But I was watching this thing going to this to open here 450. So this 455, 453 has been a strong key level. This was this pivot high here, but also if you go, yeah, relevant key level here, and I think yeah that's from last year to date. So these were my key levels here, and if we go to the 15-minute chart, if we go to the 15-minute chart, well, this 451.37 was in the middle of everything. So, okay, so here it was ugly price action just as everything here. So we created this 5-minute opening range. This is the 5-minute opening range. So we tried to break it, but look at this lack of reaction at the top of the 5-minute opening range. It actually went down, and because look at these reactions here at the opening price. So this again some context, or like deep dive into the intraday price action. Look how many touches here on the opening price. So this is why I consider important this break and retest of this area here, look at how many touches on this area, this 450 key level, strike number, round number, psych number, and also it was today's opening price. So I really like this strong break to the upside, and then this slow grind to retest this key level here. And what was happening here again, this was the 1011 reaction on indices. So let's assume that you have your position here at the top of this candle, and just because you have previous information on the day, you can aim to this high of the day, and you can have your stop loss. Look at this. You can have your stop loss here at the bottom of these retesting candles, or, well, actually, this is the very best place. This is the very best place because this candle that actually broke this 450, it was born a little bit above this key level. So this 449 something was a very good key level. I'm sorry, but was a very good level for my stop loss here, or the bottom of this candle here. So if you were aiming to this 451 15-minute key level, 15-minute chart key level, it was a 1 to 2.15 risk reward ratio trade. If you were aiming to high of the day, this was a 1 to 3 risk reward ratio trade. So any of these two objectives for the day on Microsoft, they were really good. They were really good. And then later on the day, it came back and it has been ranging here. Well, it actually, well, now it's going higher now. It's going higher now. I like this. This for 453.55. It's a key level on the daily chart. Multiple touches here and here and here. Can you see it? So guys, can you see how important is to have higher time frame key levels and also relevant key levels, for example, for the week? I mean, you don't need to have 100 lines here and trend lines and Fibonacci. I mean, if you have a few higher time frame key levels, that could be your objectives for external liquidity, and you have your own intraday price action levels for your entries. That's all what you need. That's all what you need. All right. Let me go to the chat. Well, we don't have any more comments here. Meta. Anyone likes Meta? I think the only who likes Meta is Ramesh. Royale, you are the only dude on the group that I watch trading Meta once in a while. Is anyone else taking Meta trades, or at least looking at it? No, type in the chat if you are watching or looking Meta for taking trades. I don't think so. I mean, I'm not paying a lot of attention to what you share on the Post Your Gains channel. But I don't think there's a lot of people trading Meta, right? You did look, yeah. I mean, it's one of the most valuable. It's one of the most valuable companies in the world, just like Microsoft. For some reason, there's not too much people trading, like day trading options for Microsoft. I do like it because I mean, right now it has been working nicely. But there's not too many people in the community looking at Meta or Microsoft. I think there's way more people looking at AVGO, Palantir, even this what is the name? CRWD crowd. Yeah, crowd or crown. Yeah, I don't remember. So I don't know. Well, but anyways, I mean, my commitment with you guys is to have a majority of Mach 7 here. So let's see. Contracts too expensive. Yeah, well, I think Meta are almost as expensive as the Tesla contracts. What I recommend is you decide a dollar amount for your trades instead of like quantity of contracts. That's something that I strongly recommend. So every time, I mean, if you want to take a Tesla trade, I mean, instead of taking, I don't know, like 10 contracts on Nvidia or Apple or something, you take 3 or 4 from Tesla. That's gonna be the same thing, right? And you scale the same way. So I mean, it's just, I mean, I know it's just different, and you need to make sure that you can, you start, like getting used to the numbers, because just as you said, I mean, if you are used to trade $1, $2 contracts, and suddenly you start trading $7 contracts, I mean, just make sure that it doesn't mess with your mindset, all right? Andrew Edwards, why do gaps have to be filled? Give me 1 second, Andrew. I'm gonna res- reply for that. But I'm gonna give you some hints. It has to do with liquidity. People actually taking profits, or orders that were not filled when the gap happened, right? But give me 1 second. I actually wrote something because you are the one who asked on the community, right? I was actually typing an answer for you, but then it looked like a lesson from school. So I tried to, yeah, I tried to trim something from it, but I'm gonna try to give it a short answer for that. All right. So Palantir, yeah, well, Palantir did nothing until this time of the day, 12:45. I did nothing with Palantir. It was very much inside of this 5 minute opening range. It tried to bounce here on the on this yeah on the same spot. Well, actually, I mean, I think the only kind of entry level or entry maybe here, but it was too close of high of the day. I would like some more displacement here. So yeah, I don't see anything for Palantir today. So let's go to Google. Google, since a few days or maybe last week, we had news about the lawsuit, and then I mean, we had news about this. So we had this break and retest of the 5 minute opening range. Can you see here? So this is the retest. Next candle here below the retesting candle. Your stop loss at the top of this retesting candle here, and you were aiming to low of the day. You actually got it on the second candle here. It was a 1 to 2.4 risk reward ratio trade. Anyone took Google trades today? This was the only one with relative weakness that I watched today. So this was the only who opened to the downside on the 5 minute opening range. Dude, when you look for displacement before entering the trade, what are you looking for with the market sentiment? Well, first that it's still with the indices, right? But again, remember that that's my playbook. I like to trade with the trend. Don't fight the trend, trade with the trend. So I'm looking for the indices to keep the same trend or direction intact, right? So that's first. And second, I mean, if it's like a 5 points drawdown and it happens to retest one key level, I mean, you need to make sure that, I mean, you are still inside of your usual movements or pullbacks, right? So this is why it's super important to get to know your names. Get to know your names. So now you understand if a pullback it's usual or it's unusual, and you need to start looking for market sentiment or some other stuff. All right. Um, Give me 1 second here. Okay. Well, that was all for the name. So let me talk about the gaps. I mean, the gaps, they they don't need to be filled, right? I mean, it's not like it's a rule. I mean, it's not a rule actually, but it happens very usual. Why? Because when you need to start looking at this with the eyes of an investor and not a trader or not a day trader. So let's assume that you have interest on SPY now, right? So you have interest on SPY now, and you say like, okay, well, If it gets to 580, I'm very interested. So I'm gonna set a limit order for shares here. If it and after your evaluation and you think this is a fair price for these shares, and I mean you had your own analysis and everything, so you decide that 580 it's a good entry point for you. So and suddenly this weekend, Trump said that he ended the war. I don't know, like he goes with some news, and the market gaps up on Monday. So when the market starts gapping up, it needs liquidity, it needs momentum, it needs capital, it needs buyers stepping in. But if for some reason on the next days or weeks there's no momentum, it price starts looking for the previous levels of liquidity, right? So the previous levels of liquidity, you need to think of liquidity as levels where people think it's a fair price for an asset, all right? So if suddenly 590, 600 is not a price that SPY is holding, it's gonna go back for the price that people thinks it's fair. So once it's coming to 580, there could be happening different things. People start taking profits because they are afraid of losing money, or they are afraid of assets going lower, or sellers step in and they say, well, I said that 580 was a fair value for this asset, and suddenly buyers start to step in. So this is why price actually moves, goes up and down, and the gaps happen to be on the middle of the move. But the gap is nothing but, I mean, on field orders, right? So when you look at this, and it doesn't need to be a weekly gap. I mean, it can be a daily gap. It can be a 1 hour gap, right? So what happens is that price starts looking for liquidity. That's what happens. So I hope that this at least clears some of your questions or your doubts. If you have more questions, let's go to the community. Let's keep talking there. I'm not sure I can provide you like with more clear information, but the answer or the key here, Andrew, is that you need to start thinking on gaps from the long-term investor's position and not as a trader. All right. So the trader is looking to take advantage of the price move, even if it's going up or down. But the gaps are just on field orders, a place where or a range where there were on field orders, and if price needs liquidity to continue, it goes back to that area, and once it finds liquidity, it can start moving up again. Or should we should so we should short big gaps? I don't know. I mean, we need to be aware of the gaps and look for the reaction of the gaps, because sometimes, I mean, when it gaps up, it could be because earnings, or it could be because some news, and it doesn't need to go fill the gap, but it could retest the gap. Just like here, like, can you see here this gap for SPY? I mean, we retested the edge or border of the gap, but I mean, we didn't fill it. So this gap is gonna be on field for, I don't know. I mean, maybe we never fill this gap. I mean, again, there's no rule for gaps to be filled. If you go to your chart, open your daily chart or your weekly chart, and you will see gaps from years. They don't need. There's no rule that says that all gaps are filled, right? All right, guys. So thank you very much for joining. For everyone for everyone that is new to these streams, please like the video, subscribe to the channel. We already hit the 300 milestone. Thank you very much to you. Have a nice long weekend. Remember, journal your trades, face your mistakes, learn from them. You already paid for them. So if you already paid for the lesson, take the most out of them. Journal your trades, look at your best winners, look at your best losers, look at your worst winners, look at your worst losers, and take the lessons from all of them. So talk to you tomorrow for the weekly recap with Jack. And for the guys in Monterrey, see you next week. And thank you very much, guys. Have a nice weekend. Bye.